No, okay, now we are on air. Hi, everyone. I'm just sitting here with my friend Lenny. We're going to do a live meetup with Leonardo, Davinci, and that's me. That is my real name, by the way. So, anyways, we're going to, he has a couple questions he wants to ask me about trading the little old lady method of investing. And so, we're gonna answer some of his questions. I'm gonna show you my computer screen. So because you know what, I don't need. I have two monitors here. I'm gonna be looking back and forth. So it's better if I just go to share my screen right now, and voila. Alrighty then. So we're just looking at some THC coin, which I just got paid on. But Lenny, you have some questions to ask?
I do. How's it going?
I'm doing okay. I'm doing okay.
Perfect. Hi, everybody. Thanks for taking the time to do this.
No problem. No problem. Glad to help.
Perfect. So let's the bugging start.
Alrighty.
Okay. Look, I think I got a few simple questions. Let me start off with those ones. So I think a very basic thing is, we learned the first lesson that there are different exchanges.
Mm-hmm.
So I suppose that there are also different exchange rates depending on what on which exchange you are, and also where you buy your bitcoins from dollars, right?
Correct.
I mean, it depends if you're on Coinbase or SurBTC. This is a different exchange rate, I suppose. Not more.
Yes. Different exchanges have different exchange rates because they're usually in a different country, and in that country, they, for example, here in Chile, Bitcoins is worth like $3,000. The actual price is like $2,700. So there's a significant price difference. It's which you can arbitrage and make some money on that if have the Bitcoins in the States and then transfer the Bitcoins really fast to BTC Sur, and then sell them there for like $500, anywhere from $300 to $500 more. So that's a serious arbitrage right there. I mean,
yeah,
anybody wants to do that.
Perfect. So that can answer that question, I guess. So let me just head into the next one. I think this one might be a little bit more complicated, and I might have that figured out already, but I'd rather ask you about that. I think you mentioned in the first class that you place a buy order for a certain value, and then you say your buy order gets filled up, and sometimes you pay actually less than the buy order you set. You know what I mean?
Yes, I know what you mean. Let me just give you an example. I'm gonna go to some of my buy and sell orders, and if I just click on all, and I click on, for example, here, there's PPC that I just recently set some buy orders to. So I'm going to click on that. It's going to show up with PPC.
Okay. Just to let you know, from my side, your screen is totally scrambled, so I can't see what you're doing.
You can't see it?
I'm just gonna, it's Moaz8, but I'm just gonna follow the sweet sound of your voice.
Can you see? You can't see any of the what's it on broadcasting?
Not at all. It's just one big scramble.
One big scramble.
Yeah, unfortunately.
Present to everyone. How about now? Can you see it?
No. I mean, it's a scramble because I think of bandwidth issues.
Really? That's odd. Oh, that's terrible. Okay. Well, hopefully everybody. Basically, if you can't see it, it's really a problem. Let's see.
Yeah.
You clicked on my picture, right?
Actually, the picture's not here because I got the camera.
You see, I'm right beside you. Your picture. If you click on me.
Okay, there ain't no picture, but there's just your name. Yeah, I can click on that one.
Click on that.
Yeah.
Nothing.
Nope.
Just a scrambled image.
Right. Yeah, I got your picture. I got your video on full screen, and it's just. You know what? Let me just send you a screenshot here, and I'll send it to you through WhatsApp. You know what I'm talking about.
So let me go to camera mode and see if. Okay. Let me switch share screen. Okay. How about now? Can you see me?
Also, let me switch back to the, yeah, there you're back.
You see me, right?
You're back. Yep, I can see you. Let me just send you the screenshot to your WhatsApp so you know what I was talking about.
Oh, I think I know what the problem is.
All right.
Yes. Okay. It's because the screen that I'm sharing is not 720. It's 10. It's a high resolution screen. So here, let me just switch to different setting here on the screen size, and maybe that will help.
Okay.
All right. So let's see if this works. All right. Well, just trying this out. So there's always some technical difficulties here.
Mm-hmm.
Let's see here. Share screen. Let's see if you can see my screen now. Share. How about now?
Yes, that is perfect.
Okay, that's what I thought. It was basically because of the high resolution screen.
Right.
Okay.
My puny PC can't handle that.
Lower. No, it's just that the bandwidth, it can't send that particular set of information from the screen. So anyways, we're looking at PPC, right? And
Okay.
I have a buy order right here at about 80,000 Satoshis, right? One Satoshi is 1/100 millionth of a Bitcoin. And so instead of saying 0.00080401, just usually refer to it by 80,000, how many thousand Satoshis it is, right? So that it makes it easier to say, right? Instead of saying 0.000 whatever. At 80,000, around 80,000 Satoshis, I have a buy order for PPC. Now, there's no guarantee that this is going to get filled, but the reason why I have the buy order at that, because there's a little bit of cheeky gap, right?
All right.
That's just right there at the on the hourly time frame.
Okay.
And so gaps like to be filled by the market. So there's a good chance, not 100%, it doesn't work 100% of the time, but it's higher probability that the market comes down here, right? So that's why I have a buy order at that gap. Anything can happen, but I think that this is a good place to place a buy order, so that's why I've done it.
Okay.
Right? And so when the market comes down to here, I get a fill, right? Meaning that it will notify me, hey, you know what? I bought some PPC, and then what I'll do is just sell half on a double, so I'd be selling half at 160,000 Satoshis, because that's double. Understand?
Yeah. I think that was. If I hear my echo.
I don't hear an echo, so I'm good. So I don't think it's going to come through.
Okay, good. So no, my question was actually, I don't think, maybe I didn't explain myself well. If you set a buy order, for example, for what was it, like 80,000 Satoshis, you said there's a possibility that you could actually fill for, let's say, 79,000. Does that have anything to do with the fact that usually the market price is determined as an average of the total number of people that want to buy or sell, ask or bid at different price levels? So, for example, like you want to buy at 80,000, but there are, which is just like an average value, but there are like a certain number of people that are willing to sell for, let's say, 78. A couple of people willing for 79. So basically, you take that along with you on the way. Am I right with that?
Okay. Sorry, there you got cut off. So I wanted to switch to headphones so that you wouldn't hear the echo.
Okay.
Is that better?
Yeah,
is that
that's
better?
Perfect. That's perfect.
Okay. So. So basically, you were saying that the price comes down to 80,000 Satoshis, and what you would get filled, it could go below 80,000, it could go to 79,000, but your price that you set it at is how much you're paying.
Okay, perfect. So basically, if I set up order at 80,000, I'm going to pay 80,000, and there's no chance I'm going to be paying less than 80,000. Ah, okay. Because
Exactly.
you mentioned something like that in the first video, I got the impression that I'm going to actually get a discount for some reason. I don't know. That's the impression
No,
that I
you don't
got.
get a discount. No, you don't
No.
get a discount.
Okay, well, that's sad.
There was in that other video, because I went into a little bit of a complicated situation. That's only when you're doing so let's just say I were to buy like 10 Bitcoins worth of PPC. So I'm gonna like go over, oops, I lost my mouse. Hang on.
It's a cat. It's a cat.
Okay, there we go. There we go. So let's just say I were to try and buy some PPC right now at the price, which you're not supposed to do.
Right.
So I just want to quickly explain this, right?
Mm-hmm.
What would happen is, right, if I wanted to buy 10 Bitcoins worth, notice the current price is 94,000 Satoshis.
Yeah.
So if I wanted 10 Bitcoins worth of PPC right now,
Mm-hmm.
price up. Now I'd be paying I'd be buying buying at least two Bitcoins worth here, one and a half, like another 1, 2, 3 more Bitcoins here. So I'd be raising the price all the way up. But I would not be these different prices here, all of the different prices. So as an average, I would pay, probably like 95,000 or whatever, buying up the market.
Right.
That's what I meant by discount. So you would get on an average by buying up the market, right?
Okay.
You get a discount, but you wouldn't do that, right? Because that's not what advisable to do, especially at this level. You wouldn't buy. You know what you're supposed to do, right?
So perfect. So you got caught off there a couple of times, but I think I got you. If you start basically buying up at the current price, you kind of like eating up all the low offers until you get actually to the price that you're bidding for.
Exactly.
Okay, cool. Exactly. Okay, I wasn't that wrong then. Nice.
All right. So what's your next question?
Cool. Moving on. Actually, that one is kind of related. I was actually wondering, because you were talking about a buying area or a reload zone, RLZ, that you set between the numbers 78 point and well, you know what I mean. The two fits.
78.6. 78.6.
So why do you?
Yes.
Is there a specific reason why you define that as an area and not a specific point, saying it's like, hey, you should actually always buy at the half point or something like that? Because it seems to be
exactly. There's always a difference between. I love sticking at the 78.6 level a lot. It's not a 100% sure thing, but for example, in this example here, I know my screen is a little squished. Or what I did was I set the fibs right here, and I'm going to do it on this chart here. Oh no! Okay, there we go. Because there's not a lot of room here, I'm going to have to squeeze this chart a little bit more. Okay. Right, and I think I went through here. So there we go. I went to the bottom of here. And so I bought at the 78.6, even though the market went straight down, right? Because, nothing is 100% sure. So I had a buy order here, right? And so that's okay. I didn't buy like a whole lot, only like 0.5%, not even 0.5%. 0.5% of my total portfolio. And so I'm going to put in some what's it called? These templates for different studies. So I'm going to show you that it merged down to the 200-day moving average. If we scroll in, we zoom in. Sorry about that. I'm going to have to switch my type of screen. I'm going to have to use a different type of screen. But anyways, here you see that it merged all the way down to 200-day moving average. But
yeah,
I've actually set my buy order at the next buy order at the last known high, close to the last known high, which is where it's like bounced up and down, because markets like tend to do that. They come back, they go up all the way up and go to like insane levels, and especially when it's this type of coin, right? What it does tend to do, and the reason why I say this type of coin is actually a shit coin, my French people. And it's a shit coin because look at the market cap. It's only $150,000 market cap, right? So it is a shit coin, and it's
Hello.
$10 million.
Sorry,
Take to the bank.
For a moment.
Oh yeah, I guess my headphones, because I was using wireless, they died. And yeah. So
shit phones.
Yeah, shit headphones. So anything under, I'm just connecting it back up so I can charge it again. Anything under $10 million, you should like look for it to come back to the 200-day moving average, or go below. Under 10 million market cap. That's not absolute, but the high probability, right?
I'm not going to sue you if it doesn't work.
Nothing's absolute. For example, Baya is the one that really frustrated me, right? Here's an example of where it will sometimes fail. Baya is a shit coin, but it never, ever came back to the 200-day moving average, ever.
Right.
I had so many buy orders set at the 200-day moving average, and it just never came there, right? So what do you do with those coins? Generally, what I do is if it keeps doing that, keeps going away, keeps moving away, I look for a market structure to go in and take a buy. So for example, in this example, you can see a lot of buy orders, and I'm going to close off some of my buy orders because it's not coming back.
Hey, sorry, let me just interrupt you there because I have a lot more questions. This is going to get very long. Just to try to go back to the original question. So basically coming back to the whole reload zone thing. So I understand it correctly that this whole reload zone thing is more of a suggestion saying as long as you don't buy outside the reload zone, you're fine, you know? Whatever point you choose within the reload zone, that's up to you.
Exactly.
On the currency, that depends on how much risk you're willing to take, et cetera, et cetera. Did I get that right?
Exactly. Because yeah, you start with a small risk with each of the different areas. Like for example, the thank you, Siri. So for each of the zones, right, you would choose like the amount of risk you take. So I would suggest you take a lower risk at the 61.8, which is pretty high. I usually do like 0.25% at the 61.8 or lower, sometimes 0.1%, because the coin, sometimes the coins go way below that. More often than not, they go way below the 61.8 level. But in this particular market where everything's going up, the odds are the 61.8 is going to be a turning point.
Yeah. So in the end, it really depends on the currency you choose and
the timing of the market. So for example, one of the things is markets are seasonal. So both February, March, and April is the high season, the uppy season for altcoins and alternative currencies, and same with July, August, and September. Those
all the kids out of school.
Yeah, exactly. So those are the times where you can see some serious cash being earned, but so that's where the 61.8 actually works. So you should cut it off out of the 61.8 once the season is getting near to an end. Right now, with Bitcoins going up all the time, this season has been extended majorly. so that it's been going straight through. It started in February and has not stopped since.
Okay.
My account has not gone down except for me taking money out whenever I need it, and that's the only time my account has gone down. So
okay, perfect. So basically, while you're still in the high season, try to keep, say, risk at a minimum.
now we're in the high season.
1.8.
Yeah, so right now we're at the high season. So what I do, right in this example here, I'm just going to close this little altcoin today information window. Keep messing up my mouse. Where's my mouse? Because I got two screens and I always lose where my mouse is. Okay, there we go. And so if we do the FibFib thing here, you go from the last turn, you can see this area is the 61.8. This was the last peak and came back down, and then it started going back up again. Right? So that's where you'd set your fibs for level, especially for this coin, because it's just never touching the 200-day moving average. So notice how this is the reload zone right here, where you would be a buyer.
Gotcha.
And just that in green, and that's the buying zone. And so notice I've got 1, 2, 3 buy orders, practically holding up the market.
Yeah. Okay.
This thing to launch, and you can see there's a W right here where this thing's ready to launch.
Yeah.
So you're chasing it up here. You can do a reload zone here, from here to there, and then buy it. You can do another miniature reload zone if you really want to get into this way.
Now I noticed it's a daily W. I think is interesting in weekly Ws.
Yeah, it's probably even a weekly W. But if you really wanted to get into this thing, this is where you set your buy order right here. You set your fibs and you set your buy order down here if you really wanted to get in, and hope for the best that somebody starts to panic dump.
Okay, perfect. All right. Let me move on to the next question that I have there. I think that's the one simple to answer. I was just wondering, can I place a sell order before, basically counting on a previous buy order? Let's say I want to play it without owning any of the stock or any of the currency. I place a buy order and I'm already setting my sell order for the case that for when I get my fill. Is that possible, or is the market going to tell me it's like what you want to say? You don't have anything yet.
That's a little advanced. Yes, you can do it.
Okay.
In this software, it's a little advanced. I could show you, right? But the reason why I don't show how to do it is because it's a little advanced and it's a little hard to understand.
Okay. Yeah, don't worry about it now.
I can show it to you, but it's difficult to comprehend.
Yeah, let's talk about that another time. Let's not draw this out longer than necessary.
Yeah, I mean it's possible, but man, is it ever difficult to comprehend.
Okay, no props. Cool. Now, coming back to the fibs, you usually draw the fibs between a peak and a bottom, and I know you talked about this before, but I was still kind of wondering what kind of bottom you use as a reference. The peak is always the all-time peak, right? The bottom could be the all-time low, or as far as I understand, it could be the low of the current trend the market, the currency is going in. Did I get that right?
Where it turns, where the last turn. So, for example, right, you see that the market went up here, went back down, right? This, you could call this a turn. You can draw your fibs here, but really, this is the last actual bottom. So this is where you start from the last bottom, because the turning right now, you can see it's clearly the market's turning, right?
Sorry, the screen is kind of frozen.
The screen's frozen?
Okay, there we go. No, we go. I'm good.
Okay, so you can see, I'm going to draw some lines here. That the market is clearly turning.
Yeah.
So this is the turn. So you start from because it's turning the market. That's where the bottom you start with. If you're going to buy, if you want to try to get in on this turn.
Yeah.
It's like the market's
basically run. That's basically what I meant. Like the low point of the current trend.
Exactly. So and again, right, you see that I even set the last bid after this thing topped out, very bottom. And the reason why it didn't is because this market is not breaking down back to the last level, breaking down like most of these markets. It was generally always come back to the last where it started off from the very beginning. So they go up and then come back straight back to where it started, right to the low, and then come back up again. But this one was not. So it gave me a clear indication that, hey, you know what? Don't set your fib at the very bottom. Send it at the last turn, right? So this was the last turn, so put it at the last known bottom. Right?
Perfect. Yeah, sure. These trends could be considered separately.
Other coins where you just an example coin of that is the shit coin 8-bit, because it has clear to where it came back, always back to the.
You really love bashing that coin.
Yeah, exactly. Many times this is going up and it came back down. Went up and it came back. Went up. So most of these shit coins, right, you buy or break back where it started.
Yeah, gotcha.
Right? Yeah. Unless there's like that example where the 200 average never comes back. So it came back to the 200-day moving average. And so you could set it back to I've set it a little bit high, right? And I might get screwed on that because it might even go lower. It might come all the way back down to the lowest point or even go to zero. Who knows? Right? You just never know.
Cool. All right, let me just move on to the next one there. Actually, that's a little bit more technical, and you could actually, I think that's a quick one to answer. You kind of told us in the very beginning, threatening us almost, that we are to print out these goddamn QR code for the two-factor verification, because if we lose our phone or whatever, we won't be able to get back in. Let's say I didn't do that, somebody steals my computer because I got them downloaded, somebody steals my phone. Is there really no way to get back in? I mean, seriously, is it really that great?
Yes. If you lose your, what's it called? If you have what's called dual authentication turned on.
Yeah, the two-factor verification.
And you didn't print out that QR code, that's it, you're out.
Yeah. I mean, I got it download. I don't have a printer. I don't have a printer that's working right now. I got it saved on my desktop, but in the worst case, somebody steals my computer and my phone.
Yeah, put it on a USB stick.
Yeah.
Or print it out and put it somewhere safe.
I'll print it out eventually. All right, I'll do that. I'm sorry, don't be mad.
Very dangerous not to do that, because I got an account.
Yeah, well, I don't have a lot of money in there already, but I'll definitely do that. Anyway, thanks. Now, actually, I'm getting to a little bit more interesting question. Talking about catching a fat finger. That was something interesting. Actually, I have two questions there. Let's say the first one, if you catch a fat finger, and basically, do you sell double on the stink bit level, based on the stink bit level that you got, or are you selling double on the, let's say, the regular or the before the drop level? What's your rule there?
So here's my 3 fat finger cells, right? This one got screwed up, right? Because I got a fat finger on this GLD, right? Mm-hmm. And instead of waiting for my double, I said, screw it, I'm going to sell everything and then I would have got my double. So I did it again. This time I didn't panic sell and I got a double. I did it again. got another stink bid fill, and didn't panic double, and I got a double.
Oh, you got double.
Yeah, exactly. So this one went This buyer got the double, more than 2 doubles here. Look, here and here, and then I bought it again, and then it sold again.
Do you base the double? Do you base the double on the basically price that you bought it at the stink bit level, or do you base the double on the price, basically on the level of the price, on the regular price?
On the price that I bought it at.
Okay.
So I bought it, for example, here I bought it here at 1,000 sats. I sell at 2,000 sats or close to it.
Okay. So basically, you stick to the rules there. You just place a couple of sell orders because you expect it to go way back up again.
Exactly.
Okay.
Well, that's it.
Cool. Now, related to that question, are there certain currencies that are a little bit more prone to fat fingers than others, like currency with a low market cap, since the quantities don't need to be that large to make the value tank? Or are there a couple of rules to identify these kind of currencies?
That's exactly right. If it's got a low market cap, right? Also, another thing that will help you find get in if it has a high supply, low market cap and a high supply of coins. There are a good chance that you can get a stink bit filled at the bottom where the last bottom was.
Really high supply. I would have asked a low supply because if you have more shares in circulation, then if somebody screws up.
Yeah, that means more. Yeah, if it's a high supply, look, this supply is high. There's over 40 million available. So somebody might have like 10 million of them and go, oh, screw it, I gotta get out and dump it all.
Yeah, I get that. I'm just thinking it's a little bit more likely if the supply is low because basically you have more people owning less shares. You know what I mean? It's just like
own less shares, then there's more. There's going to be more, and they own a lot less, and so the odds of a dump are a lot lower because it's diversified amongst a lot of people, right? The small number of shares that are available, small number of currencies that are available, right? Most people have, so they're not going to dump. When they dump it, they dump a small amount. It doesn't move. It doesn't move the market.
Right, but that was
more people.
That's where I was going. Usually, if you have a lower supply, then basically it's not that diversified. It's not that much. Not that hedged. That's the way I'm thinking.
No, actually, what happens when you have a low supply? More people have the coin, right? Than actually with currencies with a high supply, and it's spread out more with a lower supply. And so what happens is the opposite happens. It moves up a lot higher, faster.
Okay. Spread up more the lower supply.
The lower supply, the higher it goes, faster it goes.
Yeah. Yeah, so that's what I was thinking. If you have a lower supplies of a Bitcoin, you need a lot fewer people to make the currency move. No,
what happens is generally there's a lot of if there's not a lot of supply, if somebody wants a whole whack of it, the only way he's going to get it is if he buys up the market.
Right. Okay. I guess that kind of makes sense. I'll take your word for it, though.
Yeah.
Perfect. So that's interesting. Basically, the takeaway here is that if we're getting into, let's say, a shit coin, then we should be placing a lot more stink bits than with a solid coin.
Exactly.
Perfect. Nice.
Yeah.
Then we move on to the next question. There, you were talking, you're talking about gaps quite a bit, and you said gaps like to be filled. Or let me just preface that. First of all, how do I identify gaps? Because I thought I knew what gaps were, but then you showed a gap the other day, and then I wasn't that sure anymore. So can you show me a gap here? What do you consider a gap?
Right here.
Okay,
right,
perfect.
This candle, see how the down candle, this red candle?
Yeah.
That's considered a filled gap because the body of the candle has to fill the gap. So if it was just a wick, right, just like this long line string, it wasn't filled. But because this red candle filled the gap,
okay,
so everybody
Right.
see it.
That's a lot better. Okay.
So here's a gap right here.
Okay. Small one.
Around here.
Okay.
Right? That's a gap.
Mm-hmm.
That's not filled. So that means a candle body has to fill it. So the market has to come down and close below the gap.
Okay.
And so it came down and closed below the gap, right? And so that gap is now considered filled.
Okay. It sounds all very arcane in a way. Because you said like gaps like to be filled. I was just wondering, why is that? Or is it just a thing that always holds true and nobody really knows why?
No, it's because the gap is where the market has disturbed. When it does that, generally somebody's orders don't get filled, and so the market tends to move back down to that level so that those people who didn't get filled in that gap will get their fill one way or another, either sell or buy or shorts or whatever. So generally, that's what happens. It's just a disruption in the market.
Right.
Disruption returns the market back down so that it can get a chance to trade in that area.
Okay. So that's basically just standard market dynamics there. What's happening?
Exactly.
Okay. So, and I think you just mentioned that. My next question was going to be, how does this even happen? Because in a way, for me, it kind of makes sense that like the market opens exactly where it closes because there's really no time gap in between. So I was a little bit wondering why that actually happens.
Yeah, it's because there's a disturbance or something like that. So, for example, oh my God, we gotta buy this! You gotta buy it! It's going up! It's going up! And a whole bunch of people selling, so they just buy it anyways.
Okay. All right.
And that's why. But yeah,
It's just weird when I look at it because like because if you, for example, if you set like the chart to 1 day chart, so I suppose that, let's say the market closes at 11:59 p.m. and it opens immediately at 12 a.m. So there shouldn't be really time for people going crazy about it. You know what I mean?
yes, but usually that's exactly what happens is that in that time frame, in the closing and opening of the market, generally people like either trading robots or something like that are actively in the market, and they're not going there. They'll notice that, hey, wait a second. For example, this thing probably went crazy and then came back down, and so they didn't bother putting any sell orders, right? Because the robots didn't put any sell orders. There's no way for anybody to get any if they wanted to get some after it closed, unless they bought here at this higher point, and that's what they did.
Okay. So basically, there are gaps, small gaps in between opening and closing markets.
Yes.
Okay, and basically, it's what happens in these gaps, like in this no man's land. What causes these gaps between candlesticks?
In the market, a lot more in the regular market, a lot more than here.
Okay.
Because it's
cool.
24/7 market.
Sorry again? Was it
24/7 market? So the market is open 24 hours, 7 days a week.
Yeah.
The New York Stock Exchange and most exchanges are only from Monday to Friday, from 9 a.m. to 5 p.m. and then in the between those times there can be huge gaps.
All right.
When that happens, because some news comes out during the night.
Yeah.
Some positive news. Oh my God, they're selling billions of widgets, and then in the morning, all the sell orders could disappear, right?
Yeah.
And so the only way to buy is really high.
Okay. Yeah, that kind of makes sense. What happens behind the scenes there is what causes these gaps. Okay, cool. Thanks. Now, let me move on to that. Actually, I'd like to kind of return to that simple moving average and was it the exponential moving average? I didn't quite get that. I got with the simple moving average with the 200 period simple moving average saying basically that's a good place to, like, that's a good point to place your buy order, especially if it's close to the reload zone anyway. I didn't quite get what the exponential moving average indicates.
Okay,
what I can take from that.
The 13 EMA, right? Something you really need to use, right? You can pretty much ignore it, but an example, what the market tends to do when it's in an uptrend is stay above the 13 EMA. So you could see that it might stab below it, but then it keeps going up, and so you can see that, hey, wait a second, this thing's gonna blow. So you can start looking for W patterns and stuff like that if it keeps staying above the 13 EMA daily. So you can look for market structure to jump in. Now that's a little bit advanced, right? So in order to jump in, you would obviously set for you guys, and then hope for the best that you get a stink bid fill, right? Obviously, you didn't get a stink bid fill here. As you set your fibs, each time it went higher and higher and higher, you never got in. Right?
So basically, if the 13-day EMA stays below the market, it's a good sign that the market is about to take off.
It's about to take off.
Okay, cool. So that was just wondering what the EMA is good for. You know, what's the takeaway there?
That's the takeaway of that one.
Okay, cool.
Bulls and Trezor on here, so you can ignore that. So the only ones that you guys need to worry about is the yellow line, which is 13 EMA, and the brown one down here, 200-day moving average.
Yeah. So basically, the simple moving average is, on the other hand, a good indicator to set your buy levels.
The 200-day moving average is just a good area to buy, really stinky bid buy. If you're lucky to get
it really depends on how close it is to the fib levels.
So I mean, this one, right? You could have got in there on this one as it was they got a fill after it crossed 200. The price crossed 200-day moving average significantly, and then came back down. But even though it didn't touch the 200-day moving average, I'm sure the fibs. If we did a fib chart there, let me just do one. Let's zoom in on that. All right, and we're going to do our fibs. Like we'll just do it from the turn. Right, and you can see you did get a fill as this thing rolls. See how 13 MA it's moving away from the 13 MA. So you just keep setting your fibs as it goes higher, and then finally when it comes back down, you could have gotten filled at the 61.8 or 78.6 nicely.
Yeah, nice. Yeah, but basically that predicted that the market was gonna take off the price above the 13 period EMA. You determine buy levels based on the 200 period.
Exactly, and so that's where you could have set some nice numbers. And then once you buy, you just that's the hardest part is figuring out where to buy, right?
Yeah,
once you do that, the easiest then it's just you're just sitting on your ass waiting for yourself.
That's the whole point of this whole thing, you know?
Right? And the key is not to call tops, not to be a hero and say, okay, well, you know what, I'm going to hold this coin forever or until it gets to X, Y, Z. No. Sell half on a double and let it go. Because you know what? Most of the time, the markets do not go crazy like they are going right now. They mostly stay in a range, and so you come back up, or go up, you get your half, and sell half and double, and then come right back down, and then go back up, and you buy at the bottom again, and then they go back up, you get to sell half and double, and come back down.
Okay.
Now the market really goes for like years and years and years.
Right. So can you attribute that to the Bitcoin season right now that the market is going crazy?
Now that the market's going crazy, you have to you have to do some risky set levels, right? Like I just did with Bitcoin, right?
No, what I was asking is
like
the reason that the market is going crazy is because we're in Bitcoin season right now. Is that the reason?
Every time Bitcoin goes up, reaches a new high.
Yeah.
Every time Bitcoin makes a new high, everything goes nuts.
Okay, perfect. All the other altcoins go haywire. All right. That makes sense. Listen, like related to the whole thing, a little bit kind of a technical question. You usually talk about the 200 period moving average, but the other day I heard you talking about a 200-day moving average. There's a significant difference there because it depends on what kind of chart you're looking at. I suppose that
exactly. I say day, or I really mean
period.
I really mean day, because the day is the only one you need to worry about when you're using the 200 period moving average.
So basically, I need to set my chart to daily chart.
Yeah. When you switch down to hourly, right? The 200 period moving average, the 200 hourly moving average has a totally different meaning.
Yeah, that's what I'm asking. That's a completely different thing there. Because I usually look at weekly charts. I usually look at weekly charts, but then that's also a completely different takeaway there, I guess.
Exactly. You have to trade completely differently if you're using the lower time frames. Completely differently.
So basically, the EMA are based on a day chart.
The only things you need to worry about is both the weekly and the daily, and that's it.
Okay, but like the whole thing, let's say it's talking about the 200 SMA. The takeaway from the daily and the weekly chart is pretty much the same, let's say.
Sorry, what were you saying? I didn't quite catch that.
If you talking about the 200 SMA, the 200 period SMA, if you look at a day chart or a week chart, that's pretty much the same takeaway. There's not much of a difference there in terms of the results we draw from that.
No, you ignore the 200 period moving average on the weekly chart because one, odds are it won't show up because most of these things are very, very new.
Gotcha.
So you can pretty much ignore it, the weekly 200 period moving average.
Okay, perfect. So basically your 200 period SMA and the 13 period EMA are usually based on your on the day chart.
Yeah.
Okay.
You also 30 SMA, but let's just not talk about that.
Okay, cool. Nice.
The reason why to look for rainbow crosses, but whatever. You know what? That's a whole other class.
Yeah, I'm trying to keep it simple for now. You just can't if it gets too complicated. Yeah. Okay, moving on. And I'm sorry if I'm jumping back and forth because I haven't really sorted these things, but coming back to one of the most basic rules of the little old lady style here, you were saying at the very beginning never spend more than 5% of your budget on a single trade, and then on another video you were saying never spend more than 5% of your budget on a single cryptocurrency. Now I can have several trades in one and the same cryptocurrency, so I kind of wonder which one holds true here.
They're both the same, right?
Really?
So whatever you're trading, whatever you're doing, no matter what you do in life, generally, if you follow that rule, right? Whether it's buying a house or buying a car or anything that you're doing for investing, basically, car, whatever to invest in, it shouldn't be more than 5% of whatever whatever money you've set aside to invest in.
Oh yeah, I get that. I was making the difference here between differentiating between trade in a cryptocurrency, because it's one thing if I did not invest more than 5% of my budget on a single trade on a single cryptocurrency, because I could have several single trades with one and the same cryptocurrency. You know what I mean?
Good point. So what you're really saying is, I want to have several buy orders. So all my buy orders are going to be under 5%. So I'm going to have one at the 61.8, and the other at 78. Both be under 5. No. The total sum that you invest in the currency must never exceed. So, for example, if you put in 1%, if you put in 2.5% at the 61.8, the 6 is 2.5% again, and that's it. So the total sum that you spend at the time that you spend it,
at the time,
yes, should be a total that no more than 5% of your portfolio, 5% of your portfolio. So if your portfolio grows, obviously you can increase the amount, but other than that, you never increase beyond the 5%.
Right. Okay. So basically, I think the keyword here is at a given point in time, because I could basically, the thing is like about the little old lady style is that you always keep some money in a currency. So basically, I could invest something in Aeon right now, and I could come back in, let's say, 2 years and make another trade because, hey, it looks good right now. But by investing a second time, in a way, I'm putting in more. But then that's probably going to be less than 5% of my overall budget because my overall budget has grown by then. So, okay, I get it. It's 5% per trade. There you go.
Not per trade. No, not per trade. And total sum of everything you spent on the currency. So let's just give for an example, for even numbers here, right?
Okay.
You have 100 Bitcoins worth of currency. Hello?
Mm-hmm.
You hear me?
Yeah,
okay.
I hear.
So you have 100 Bitcoins worth of currency. So 5%, right, of 100 Bitcoins is 5 Bitcoins, right?
Yeah.
Right? So the maximum you can spend is 5 Bitcoins. So let's just say you put in, you got all excited about this currency at the 61.8, you put in 4 Bitcoins at 61.8. Mm-hmm. Then your holdings go down to 75 Bitcoins, right?
Yeah.
You lose by 25%, right?
Right.
Well, and you want to get more of this currency, right? Because you feel happy about it, right? Mm-hmm. But you can't, because guess what? Now your total sum is what you bought was that 4%. You bought 4% of the currency. Well, not 4%, but 4% would be if you bought 4 Bitcoins. Yeah, you bought so you bought like a major percentage of the Bitcoins, and now price here, your total holdings has gone down, so you can't buy anymore.
Right.
You shouldn't buy anymore.
Gotcha. Because all of a sudden because your holdings went down, or you have 10%.
Yeah, exactly. So you have a major percentage. Yeah.
Okay.
So let's just say 50%. You got a huge percentage already of that currency. Yeah. So if your holdings go, but on the opposite side, if your holdings went up to 200 Bitcoins, well, you can put in another 4. You could buy another 4 Bitcoins or up to 6 Bitcoins.
Yeah.
Of that currency.
Perfect. That makes sense.
Follow?
Thanks. Yeah, that clears it up. All right. Jumping back to another topic, and I think you might have answered that in a previous question. But I was just wondering about that whole market cap rule that you set up, because you said like the whole supply rule, that kind of makes sense to me, because you said if the supply is too high, it just takes forever to move, because that's not interesting.
Uh-huh.
The market cap rule, is it because if the market cap is too low, it's going to be too fickle, or what's your reason there to say like that 10 million is like a minimum here?
If the market cap's too low, it's a lot. It takes very little money to move it. Very little action to happen for things to happen. So because of that low market cap, right, price can like move significantly in either direction.
Right. So unless you really want to take a risk, high reward, but we don't want to do that. But unless you want to do that, right, you will stay away from that, right? I get that. Cool. Moving on.
So you have to set the buy orders really low.
Yeah. Cool. Now, next thing, I quote you. You said once, never buy at current price. But what if the current price is already within or even below the reload zone?
Yeah, you could do that. You could just, what I suggest you do is just, if it's in, right, between the, and you want to buy this, and you're just like, okay, I'll be okay if you did that.
Mm-hmm.
Just, you know, a couple sats, like 100 sats, and buy there.
So, sorry, can you repeat that? You got cut off there. Sorry.
Okay, buy like minus, like, for example, let's just say this was in the reload zone. Price is at 23,379 sats.
Mm-hmm.
So set your buy order at 23,000 even.
Okay.
Or 23,100, right?
Right.
But just below the market.
Just
buy
because.
up the market.
Is this just a matter of principle?
Buy up the market. Yeah, because you don't want to move. You want to get a discount. Cheap. Okay. You're getting so that.
So basically, that's basically not a big reason to. It's kind of like a matter of principle there.
Yeah, exactly. Don't buy up the market.
It's just a big no-no.
Yeah. Okay, I mean, you can. It's not gonna hurt, but just as my personal.
It's against the golden rule of trading.
Right. I mean, sometimes like phone. That's because what happens is you tend to phone. If you get into that habit, you'll get into the FOMO habit.
Ah, okay. Yeah. Okay, that kind of makes sense.
You know what the FOMO habit is? The fear of missing out.
Right. The FOMO.
Fear of missing out.
Gotcha. It's kind of like you conditioning yourself to be a cheap ass.
Yeah. Yeah, and I get it too all the time. I mean, even today, like I had to stop myself from FOMO buying.
Right. Well, that kind of makes sense from a psychological point of view, I guess. Oh, I was just wondering about that. Cool. Moving on. And actually, there are not so many more questions left there. So, okay. I was just wondering about why the 78.6 level is called the line in the sand and why the 38.2 level is called the first stop target. What's the significance?
Oh, the 38.2 is his first stop target, but that's only for like if you're a trader, day trader, don't need to worry about that.
Okay, let's skip that.
8.6 is called one mountain. We call it mountain, and we only nickname these things just for fun.
Yeah, no, I got that.
Using numbers all the time.
What about the 78.6?
Yeah, he always makes money because he uses that all the time.
Right.
Day trades with that level just straight, and like he would walk away with $10,000.
Oh Jesus!
But going long on the 61.8 level, and we're like, what? How did you do that?
I guess he has a good feeling for the market, I guess. Now, what about the line in the sand there, the 78.6? Is there something to it, or is it just another nickname?
Yeah, generally the market, not all the time. In general, the 78.6 is called the line in the sand because the market will draw a line in the sand and hold that level. More often than not, like more than like 60% of the time.
So basically, saying usually it rebounds there.
Or around there.
Okay. Basically, that's the point where the market turns around. Usually.
Yeah, well, not all the time.
Oh, of course not.
But if it breaks the line in the sand, sometimes it's like, okay, freaking die, get out. Emergency, like for example, 8-bit, right, broke the line in the sand, so chances are you feel a world of pain. Right? Because this was the line in the sand, and it broke hard.
Oh, we got two Big Lebowski references right there.
Yeah, so
nice.
I'm gonna get world of hurt. World of hurt.
There's a line in the sand. You're gonna enter a world of pain.
Yeah, but that's okay. It just doesn't matter. I mean,
okay,
just small percentage of my whole overall portfolio. Move on to the next thing, right?
Cool.
That's where you have to really have the discipline. Is like to just ignore these stupid things whenever they happen, because not everything's gonna be a freaking winner, like a winner chicken dinner.
Right.
Let it go.
I was just curious about that. Cool. Actually, I wanted to ask you about Bollinger Bands, but I don't know if that's the right time to ask about that because that seems to be an advanced issue.
No, you know what? That's not. Yeah,
All right.
super advanced. Super
Okay,
advanced.
cool. Let's skip that then. I was just wondering about your personal behavior when you complete a sale and you have some, how do you call it, free positions. Unless
yeah.
you reinvest them immediately, do you leave them on the exchange or do you transfer the proceeds back to your wallet?
I leave it on the exchange, which is a dangerous thing to do.
Okay.
Mostly why I do that is because I have money to. What I should do is take more than half of what I have right now. I have like 8 freaking Bitcoins, even more than that. I've got like 160 Bitcoins, right? Because some of these are sellers, and that's just freaking dangerous.
So basically, rule is, let's say 80% of your free positions should go back to your wallet, and 20% leave it on the market to, whatever, play around.
I would say 80%, really. I'd say, yeah. I mean, that's whatever you feel comfortable with, basically.
Yeah.
Is what I would.
Yeah, because I was just wondering, because usually leaving your money on the market is kind of dangerous, What was the name of the Japanese one that got hacked?
But the point of this teaching you guys this actually is because I'm going to be producing a software that prevents all that, so that it will actually, you'll be able to take possession of your money and only send it when you need to do a trade.
Okay.
And so that's the whole point of teaching this level, these things for free or for low value.
That's a big old sales pitch as well.
Yes, I want to make money on another project, which is a program where I'm going to be calling Pandora's Wallet. Right?
Hello?
So that Pandora's Wallet. Hello, can you hear me?
Yeah, sorry, just got cut off there for a moment. I'm here. I'm here.
Can you hear me? Okay, so Pandora's Wallet stock that I'm going to be selling, I'm going to be actually making the money. Because what I wanted to do is get as many people into this little old lady style.
Yeah.
I'm going to have the same problem that I do, software that I'm going to be making, called Pandora's Wallet, and you'll be able to take possession of all your coins and only transfer them when you need to onto the exchange.
Okay, I feel like James Bond getting the big reveal on the sinister plan right now.
Yeah, there you go. There you go.
It is too late, Mr. Bond. You can't stop me now. Okay, perfect.
Oh man, my internet is about to die, so we should cut this off.
Oh, that ain't good.
Yeah.
You wanna run it? You wanna? Okay.
Yeah, so let's end this here. So it was a good meeting there. Nice.
Perfect. Well,
I think all those questions were excellent, and I think other people will benefit from those questions that you've asked.
Thanks, man.
So I really appreciate you sharing this video with everybody.
Right. Thanks for doing this.
Yeah, no problem. I'm gonna stop recording, and you can continue talking after I stop the recording.
Okay.
Okay. Just 1 second.